Good evening and welcome to Realty Coffee Talk on Awaz Entertainment. My name is Tahir. I am your host tonight. Will the housing market crash in 2023? We're going to talk about the factors that indicate any potential crash of housing in Canada, particularly in the province of Ontario. My name is Tahir Qureshi. I'm a fellow of Royal Institute of Canada and broker of record for City Pro Realty Inc. brokerage. Also, I am principal broker of Canada Express Mortgage Inc. license number 13241. What are the factors that indicate is there going to be any crash? There are multiple factors. First is the employment. Is the employment declining, or it is an issue of labor shortage and skilled labor? All the data shows that we have a shortage of technical skilled workers in Canada. Construction is one of them that affects the housing market. So therefore, we will be needing more technical immigrants coming to Canada to fill the gap. You have noticed that there was a strike early in 2022 in province of Ontario, and construction workers walk away because of better wage. Construction cost of building homes have increased 30 to 35%. In some area, more than 40%. That impacted the cost of building the house. Regardless of interest rate that's gone up, the cost of construction has gone up. Therefore, shortage of housing will continue. Based on the effort of Ontario government passing a new law to easing up the approval process, facilitating use of land to build more houses, also allowing additional homes, or we call garden homes, within your current lot, is also going to help to build those houses and eliminate or reduce the shortage of housing. Economy. Our economy is working with stimulation package given by the federal government. There is a high demand of goods, but the problem is shortage of supply. And this not only affect about 65 to 70% production in Ontario or Canada, which has almost reached a point of 95% in across Canada. But there is a still shortage of supplies because of material or product being imported from overseas. So if supply chain improve over the few more months, then it will eliminate and it help to reduce the inflation, which is still standing close to 7%. Bank of Canada has raised interest rate. That has really impacted the borrowers. Their ceiling came down because of only mortgage interest rate. And it affected those who were borrowing, again, variable mortgages for purchasing their homes. And some of you who have stressed themselves too much to get into the house to acquire the property, and prices decline in certain areas, that affected the affordability and maintainability of the housing, where you have seen in the report, our sale data shows in October report that our active listing has increased 68.1% to last October 21 to 22. Even though our average price from last October to this October has reduced by minus 5.7%. But the indications are our average price after 12 months of 1.1 million 2020 is now stand at 1,200,000, almost 100,000 above the value. So there is no indication that price is going down based on what's happening in the marketplace. Even the interest rates are going up. Only thing is affecting is who are being affected by the real estate housing market. First of all, it affects the real estate professional. We are doing less transactions, so less people are being paid because they are not able to earn money. So it's affecting their household. We have almost approximately over 95 to 100,000 realtors in the province of Ontario. And across Canada, maybe 155,000 approximately. You can check the data at korea.ca or visiting other resources available to you. Those households are spending money, paying their mortgages, they're paying their car insurance, they're paying for auto insurance, school fees, food. So all those industries that are related to that are affected. Not only real estate professional, lawyers, they will have a less job to close because as you can see that there were 67,000 transactions took place in Toronto, GTA, based on the Toronto Regional Real Estate Board. 67,000 as compared to 121,000 in 2021. So obviously, we will have less inspection, less appraisal. So those people are affected with this. So this is going to have impact on the earning of those individuals that rely on this income. Any renovation business, any painting, plumber, electrician, anyone who's involved with those renovation of the building are affected by this. And then also the government of Ontario and the provincial tax. In Toronto, we have a municipal tax and also Ontario provincial tax. So declining sale will affect less revenue for the Ontario government. And also GST, HST, where applicable because our self-employed is going to affect all those involved with the real estate, part of the real estate portfolio. So therefore, there will be effect on those people who are involved directly with real estate. Then it's going to be the shelter issue, how they're going to live. The cost of rental is going up. Costs have increased already. A one condo, one bedroom is running about $2,300 to $2,800 in Toronto, one bedroom condo. So if the cost of rental is going up, how people can afford it? So it's going to affect individually people because it's affecting the housing market and who are being affected. But it appears to me that we will be doing approximately close to about 80,000 transactions. I am projecting, including November and December, approximately as compared to 121,000 done through TRAP. This does not include the reports from ITSO that has 21 boards that have their own data, which is approximately 5 to 10% of the data that is not reported on TRAB, Toronto Regional Real Estate Board. So looking at the overall picture, it is going to not crash based on the data. People have the ability to absorb the shock of interest rate. Prices has come down in various areas, and therefore affordability has gone down. You may not be able to buy the property of your best wish list, but you may be able to buy a property because your threshold, your ceiling will be limited based on the criteria of the mortgage, securing a mortgage. There are alternative options available to you. My prediction is that you're going to have another 0.25% increase, quarter to maybe 0.5% increase on December 7th by the Bank of Canada to push further inflation to come down. And it's going to slowly grow also to the second or third quarter in 2023 before it stabilizes about projection of 3% inflation rate in December, by December, then hopefully by 24 January it start declining. It will not go back to as conventional low interest rate we have in the history of in Canada, and particularly it provided the boom during pandemic where the price escalated 18.2% to 19% in just 1 year in 2021. We are going back toward 21 prices, but based on the average price that is shared on Market Watch by TRAB, shows that we are almost over $100,000 average price based on 10 months as compared to 12 months of 2021. Therefore, I do not see any reason to be afraid or concerned about housing crash in the province of Ontario or across Canada. Prices will decline, is based on supply and demand. The government of Ontario, federal government, has initiated many programs that provide additional funding to facilitate collective arrangement with municipalities, Ontario, and federal government to expedite the approval process. Now it will be up to the builders. They tend to make money when there is a less housing, there is a high demand. But if they are provided opportunities to fast track their approval process, they might expect to increase their production. Challenge we really have is before the pandemic started, we were short of 40 to 45,000 houses across Canada. That has not changed. Only pandemic facilitated demand because interest rate was high. People were able to qualify for a higher threshold. Therefore, they were able to buy the property. We have multiple bid offers, and price went up all the way. Okay. Now that is not the case. Interest rate going up, affordability has gone down, so less and less people are qualifying it. But there is a bargain for those who have done their homework. They have saving to put down, and they can maximize their down payment, so they borrow less money, and you have a turmoil of this projection for next 12 to 18 months. That's an unstable, unpredictable period that we all facing. And best guess is very likely that you will have maybe 1% more increase in 2023 before pricings of interest rates start coming down, inflation under control. Because Bank of Canada want to control the inflation, and they want to reduce it to 2% in 2024. So in order to do that, to reduce the interest rate, if inflation comes down to the projected forecasting by the Bank of Canada to 2% 24, we expect to have a normal rate, interest rate coming down, and affordability become an issue. So people have asked me many times whether we should take a variable or we should take a fixed mortgage for now until this period. You have to remember that the mostly bank, they offer two options. 5-year fixed is kind of standard, or 5-year variable is kind of standard, and especially if his loan to value is between 80 and 100%. Between that, when you fall into an insurance mortgage, they tend to give a better rate to you. I have a vendor that provide 5 years fixed for 5.09, but it has to be insured mortgage. If you are below 20%, let's say 72 to 80%, they provide 5-year fix for 5.29 approximately. That's a 5-year fixed rate. And as you go down, 1 year, 2 years, 3 years, or 4 years, the different rate will apply. And variable is option between the variable and fixed is that if you are able to absorb any increase coming, for example, let's assume on December 7th, the Bank of Canada increased your rate by 20 point, 25 point, or maybe half point. Right now, your prime rate is 5.95. So that means 0.25 needs to be added to it for any payment that's starting in December. And then, or maybe 0.5% more automatically. But projections are that declining of interest rate will not begin in 23. That may happen in 24. So are you able to adjust that? If you are paying a small amount now, and then in 24, you are able to get the benefit of reduction in interest rate, then you will be able to go for your variable mortgage. But if your income is fixed and you have calculated your risk and you know that you can carry forward this, depending on your commitment, you can go for 5-year fix, 4-year fix, 3-year fix, depending on your circumstances. If you want to learn about it, how to qualify, and you want me to help you, go to express-mortgage.ca, download the PDF form application, and send it to me, tahir at express-mortgage.ca. I can review it, and I can apply for your mortgage to get you the best option available, because we have various vendors, they provide that. So this is why it all depends on your affordability. If you are on a fixed income, salary employee, you don't have a risk to cover the contingency funds unless you have a saving. Lots of people traditionally, when they buy the property, they put as much as information possible to carry on the mortgage, but they don't have any contingency funds. Sometime, like anybody else, you can have a mortgage home equity line of credit. I have too. I borrowed money and I was paying 2.45. Now it is automatically gone to 5.95 because it's variable. But I'm hoping that I will survive through the 2023 and comes down and I will benefit from it. But I know that based on my household income, we can qualify, we can carry that. Because you always use line of credit to support your kids or other essentials that you need to support the family expenses. So this is very important. So you need to check, especially those who are on a variable mortgage. They need to check, do they have additional funds that they can handle it, this variation. Remember the stress test. OFC has stress test at 2%. If they give you 5% 5-year fix, they will add 2% more as a contingency. They qualify you based on 7%, an example, not on 5% or 5.09%. They're going to qualify you at 709 to make sure that if something happens, you can still afford the mortgage. You don't default on mortgage. And this is why FISRA, that is a regulator that regulate mortgage industry in the province of Ontario, and they implement MBLLA. That's the law that governs mortgage business for us. So there is two things. One is called suitability. A product that a mortgage agent or broker offer to a client, are they suitable or not? You have to go through a lengthy analysis to figure out this person can afford it or not. And products to suitability. Know your client. That means we have to know everything about our client. What kind of expenses they have, what kind of income they have, what kind of debt they have, What are the obligation? Student loans, medical bills, travel expenses, food, car insurance, auto insurance, mortgage insurance. We calculate, create a GDS and TDS to make sure you can afford this mortgage that you are seeking. Know your product, know your client, know your product. The product is what we are offering to you as a solution based on your resource, financial position. This is why it's very important. Why will housing crash? If we, all of us, consumer, professional, in related to anything, major expense is housing. We have a shortage of housing, and it's going to continue to do that. Reason wise, there's a lots of immigrants. They were living outside of Canada. They were resident, permanent residents, or Canadian living in other places. They are coming back. Number two, we also have approximately 400,000 immigrants coming to Canada. They will be needing a housing. And you cannot build housing in a day or two. It takes time. And subdivision, when you're creating a subdivision, it takes almost, planning process used to be about 18 months, 12 to 18 months. Now the government has put efforts to make sure they can expedite those and get them sooner in construction. Construction will take about a year to 12 months, depending on number of housing. Those housing has to be sold. And those people who will have the money to close the deal. Lots of builders are concerned people's ability not to close. Lots of builders are saying that the buyer has no funds to close the deal. They're walking away, they're forfeiting their deposit. And there is a regulation, there is a restriction from the Ontario government. They're penalizing through HCRA, Home Construction Regulatory Authority, to those builders who are forcing buyers to withdraw or cancel their deal. So there is strict enforcement by the Ontario government. HCRA has the authority. So if you are a buyer who bought a property with the builder, make sure that you provide the funding, you arrange your money for it, and get that closing so you don't lose that house. Because price has escalated. You know that since, particularly in 2021. So based on the data that we have here, and I said before, I'm going to, that the price is not going down. I'm going to go back and show you the figure. In 2021, in TREB, total transaction, our average price was $1,095,335 based on 121,638 transactions through TREB. This does not include those exclusively sold by the builder without going to MLS. This does not include the property that are strictly on ITSO or other MLS systems. Okay. Now, as of today, in October, we have 67,559 transactions through TREB. And average price is $1,203,916. So if you look at $1,095,000 versus 1,203,000, if you plus minus this, you're talking about 108,000 increase based on 10 months of transaction in 2022. So we're going to continue our conversation after the break about Korea, Canadian Real Estate Association. What are their projections for 2023 for across Canada? We're going to go through that and we're going to talk about that after the break. You're watching Realty Coffee Talk and Awaz Entertainment. So we're going to take a short break. We'll come back to you shortly.
खूबसूरत और दिलकश ज़ेवरात का बेमिसाल मरकज मक्का ज्वेलर्स आपकी खुशियों में बराबर की शरीक खूबसूरत की खुशियों में बराबर की शरीक जहां आपको मिलेगी आपकी पसंद की कंगन चोकर सतलड़ा झुमके चंदनहार बेशुमार डिजाइन की अंगूठियां और चूड़ियां तो आज ही तशरीफ लाएं 7086 एयरपोर्ट रोड मिसिसागा। आपकी ज्वेलरी देखकर लोग यही कहेंगे, मक्का ज्वेलर से लिए हैं क्या?
Welcome to Pak Homes Builder Incorporated. We design and build custom homes for landowners, low-rise condo buildings, plazas as well as the industrial sector. We are a registered vendor with HCRA to build homes across the province on Ontario. We provide Tarian warranty in accordance with Ontario New Home Warranties Plan Act.
We build your dream home.
Call us today at 905-904-5353.
Pan and Shawarma, now serving from 4 locations.
KK Travel believe in providing everyone the first-class customer service. We take care not only for your air ticket, but dignity and respect as well. We are available for you anytime on WhatsApp, even while you are in Pakistan or any other destination. KK Travels guarantee lowest prices and are open to price match any airline.
We are KK Travels under supervision of Gas Khan at 905-367-9433 or visit www.gaskhontravels.com.
डिक्सी इलेक्ट्रॉनिक्स और अप्लायंसेस पिछले 16 सालों से खरीदारों की खिदमत कर रहे हैं। हम लगातार 4 सालों से खरीदारों की पहली पसंद बने रहने का अवार्ड हासिल कर चुके हैं। हम किचनर्स, बॉश, वर्लपूल, एलजी, सैमसंग और जनरल इलेक्ट्रिक के ऑथराइज्ड डीलर हैं। 5 स्टार खिदमत का लुत्फ लें। हम आप सभी को टीवी सबसे ज्यादा रियायती दामों पर देने की गारंटी देते हैं। www.dixieelectronics.ca हमारी वेबसाइट पर जाएं या अभी कॉल करें 905-625-5900। सभी बहुत ही मुनासिब कीमत पर दस्तयाब हैं जो आप बाआसानी से ले सकते हैं। At Dixie, we sell quality and deliver confidence.
Zoc. Now it's fully renovated. Live catering, barbecue, tandoor, जलेबियाँ और fresh naan. तकरीब आपके घर में हो या घर से बाहर, Zoc is providing full service now, and Zoc has opened a new banquet hall, garden event center. आपका Zoc देखकर लोग कहेंगे, क्या Zoc है आपका? Call right now 905-625-7786. Zoc वालों के लिए। खूबसूरत और दिलकश ज़ेवरात का बेमिसाल मरकज मक्का ज्वेलर्स। आपकी खुशियों में बराबर की शरीक, जहां आपको मिलेगी आपकी पसंद की कंगन, चोकर, सतलड़ा, झुमके, चंदनहार, बेशुमार डिजाइन की अंगूठियां और चूड़ियां। तो आज ही तशरीफ लाएं 7086 एयरपोर्ट रोड मिसिसागा। आपकी ज्वेलरी देखकर लोग यही कहेंगे, मक्का ज्वेलर से लिए हैं क्या?
Welcome to Pak Homes Builder Incorporated. We design and build custom homes for landowners, low-rise condo buildings, plazas as well as the industrial sector. We are a registered vendor with HCRA to build homes across the province on Ontario. We provide Tarian warranty in accordance with Ontario New Home Warranties Plan Act.
We build your dream home.
Call us today at 905-904-5353.
Hello and welcome to Realty Coffee Talk on Awaz Entertainment. My name is Tahir Qureshi. We're talking about the building housing market crash in 2022. Based on the data available to us through TRAB ITSO, and also Canadian Real Estate Association. We do not see any reason to be concerned or the market crashing in Ontario or Canada. So I'm going to share with you now data from Canadian Real Estate Association is available to all public, and I just reviewed it. I want to share with you their projection. As I indicated to you before, the sale activity is declining, and based on Canadian Real Estate Association projection, forecasting in 2022, the sale will decline minus 20% across Canada, based on Korea report that's forecasting for 2022. And forecasting for 2023 will be minus 2.3% based on the projection we have for 2022. And if we look at I'm going to talk about all provinces so you have a data. So in British Columbia, it's going to be minus 29.7%, talking about sales. And it will be minus 1.5 in 2023. That's a forecast. In Alberta, it will be positive, 4.5% increase in Alberta. And in 2023, it will be minus 6.4% transaction in Alberta. Saskatchewan, they're expecting minus 10.2% sale projection forecast for 2022 and minus 5.1 in 2023. Manitoba, there will be minus 18.4% projection in 2022 based on the sale for 2021, and also minus 5.4 in 2023. This is a projection for Manitoba. Ontario, we are expected to have a minus 27.6% sale in Ontario, and 23 it will be minus 1.4 projection for 2023. These are sale transactions. That means we're going to have a less. And as I mentioned to you about the data from TREB, it was showing decline already because we are sitting at 67 versus 121, just only TREB only. So you can see the parity, the difference between the two. So we're going to have a significant change there. So Quebec, we will have a minus 13.4% projection forecast for 2022 and minus 0.8 in 23. So it's going to improve there. And New Brunswick, we're going to have a minus 16%. And in 2023, it will be minus 1.7. And Nova Scotia, there will be minus 16.4. And projection are positive 1.7 sale increase in 2023. And Newfoundland will be minus 3.4 projection forecast for 2022 and minus 5.4 projection for 2023. Let's talk about the real value and average price. This is across Canada. Remember that these are the statistics collected by Canadian Real Estate Association. So you need to talk to your real estate professional in your jurisdiction. I have a license to practice in the province of Ontario. So if you need any information about any product, house or commercial or anything, you can talk to me, and I call my number 905-785-9923. I'd be more than happy to help you to analyze where you stand or what is the market value of your property. So Canada-wise, guess what? Canada-wise, they are projecting the average price of $688,096, which was in 2021, will increase to $720,255, which is 4.7% across Canada. So 4.7% is increasing the value of the property. And forecast for 23 is 721,812, which is a 0.2. So projections are 23, you will have a small increase in 23 for overall across Canada. We're going to talk about other provinces as well. So British Columbia, average price is increased 9%. In 2022, that's a forecast. And in 23, there will be minus 1.2 in British Columbia in 23. That's the forecast. Alberta will have an increase of 6.8% average value from 21 to 22, and there will be 0.5% in Alberta. And so in Saskatchewan, they will be expected to have a 2.7% average price increase forecast. And in 23, their forecast 3.6%. Saskatchewan, there is going to be 2.7% increase average price forecast, and 3.6% in 23. Manitoba, 8.8% increase average price increase forecast for 2022, and minus 1.2 in 2023. Ontario, we have an average price of 871,867, and we have a 23.6% increase in 2021 from 20 to 2021. And their forecast for 2022 is 945,427, and is an 8.4% increase projection by forecasting by Canadian Real Estate Association. And in 23, they are showing 943,059, which is minus 0.3. So in 23, we're going to be break even, or his projections are going to be minus 0.3 is going to go down in 2023. That's a forecast. Quebec, there is a 16.8% increase from 21 to 22 forecast, and there will be a 0.5% increase in 2023. New Brunswick will have a 16.5% increase in 2022 from 21, and 0.4 increase, so it's still positive. And Nova Scotia, there was a 23.1% increase in Nova Scotia from 20 to 21, which is the second highest average price increase after Ontario in Canada. And they are expected 18.1% increase in 2022 as forecasted by Canadian Real Estate Association. And forecast for 23 is 425,025, which is 6.9% increase projection for increase in 2023. And Newfoundland is 5.8% increase in 2022 from 21, and projection for 23 forecast are 5.7%. So you look at this, as of 2022, every province has increased average price projection or forecast by Canadian Real Estate Association across Canada. So I do not see any reason to have panic that the housing market is crashing in 2023. So be comfortable. Only thing you got to do is to make sure you manage your financing, and you make sure you cut down any extra expenses. And biggest challenge that we're going to have is those sellers who are not able to afford their mortgage, and they have challenges to pay the bills. Remember that if you are not able to pay the mortgage, you may have to talk to your real estate professional, and you have to project how much money you have to sustain this. So if you have no choice, you don't want to lose your equity, you may have to sell your property rather than losing your equity or putting on a power of sale or defaulting your mortgage. When you have a default or you're not paying a mortgage, it reflects on your credibility. So talk to your family, talk to your friends, and arrange financing. Talk to your lender, talk to your bank, and get them refinancing, and you can survive through this most critical and difficult time we all facing because of interest rate hike by the Bank of Canada and ultimately all the lending bank has increased their interest rate. The best thing for you is to manage crisis and learn and tighten your belt so you can go through this short time. I am hoping that next 12 months to 18 months, you will go through it, and we will be talking about as a history that we survive this housing crash that everybody has thought about it, or it is in your mind. There will be no housing crash based on the data projection for 2022, and you see some decline in 23. By that time, toward end of 23, interest rate may start coming down and inflation goes down. There will be more supply. Therefore, maybe banks decide to go down and reduce their interest rate. But I can tell you, based on the exercise we went through, because dealing with the pandemic virus was a challenge for everyone. Everybody has to learn to transform their business and activities to deal with the challenge that we have. So we all learned to survive, and we made it through. Yet at this most critical time, I am sure you are prepared to take on the challenge and cut down your cost and control your expenses so you survive. Mortgage rate will not go back to as low as we have witnessed during the pandemic. Let's assure you that it's not going down. You will have come down in 2024, and average price will be stay close to 5, between 4 and 5. They're not going down as we have enjoyed in during the pandemic. You are watching Realty Coffee Talk on Awaz Entertainment, and we broadcast our program every Thursday at 7 p.m. on Awaz Entertainment in Canada, around the world. Thank you for watching. May God bless you all. May God